Welcome to Revere Asset Management's Your Money with Danny Stewart
The market will always overshoot to the downside and to the upside.
and Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep.
Hello, investors. Don't be confused. This isn't a nightly video. This is a podcast, but you got Don in the main seat today, filling in for Danny. I have a feeling he might, at least his voice might make an appearance later in the show. So no monologue from Dan. We are going to get straight into the markets because this continues to be a very challenging market. And now, if you take a look at this picture of the S&P 500 that's on the screen, and you've got the S&P 500 above all key moving averages, you're gonna ask me how in the world this is a challenging market, and I'm gonna show you why it's a challenging market when I bring up this picture right here. And that is because something we're following up on from last week. How is the AI trade doing? And the answer is, I'm not going to say no bueno. I'm going to say no es bueno, because I was corrected by somebody who speaks Spanish this week. That no es bueno is actually the correct. Where is my picture here? There it is. All right. What do we got here? This is the Revere AI 100 index, which we started back at the end of May. We're now on July 2nd, and you can tell by the color codes here that we're not going in the right direction on this. In fact, we are now, since inception, this is as of 11:46 Eastern Time on Thursday, July 2nd. Yesterday, the RAI 100 index was down 4.4%. Today, down 4.6%, negative for the week. And that brings, since inception, the return down to a minus 2.74%, while the S&P is flat during this same period. This is something we came up with as an objective way of saying, is the bubble bursting on AI? Let's not kid ourselves. The bubble will burst at some point. And what you'll see is big losses, the way we saw them back in when the tech bubble burst and the way we saw them when the real estate bubble burst. I don't know if they'll be that severe, but this trade has taken up a massive percentage of GDP and a massive percentage of spending by the companies that are investing in it. And they're absolutely correct that they can either invest or get left behind. They're spending billions and billions of dollars in CapEx on this. And the question is, a lot of these stocks have run up extremely strongly. And now what we're seeing is, over the past 5 weeks, the return is actually negative on it. Now, we're not majorly concerned about this. I would say we're minorly concerned about this. Now, last week, the thumbnail was, and the headline was, why are Revere and the bull? Our thumbnail was Paul Revere with the lantern riding a bull on a surfboard, which is completely normal. I'm sure everybody can acknowledge that. Bulls ride surfboards all the time, metaphorically speaking, because we say ride the wave as long as we can ride the wave. And when the wave peters out, we get off the surfboard and wait for another wave. If you're looking at the S&P 500, we can keep riding the wave just fine. If you look at RSP, which is the equal weight S&P 500 and is more heavily weighted toward value names because of the market cap aspect of the big tech names, you can see the relative strength line here and the fact that it made all-time highs today. Note it did not make all-time highs on a relative basis. That happened back in February and March, which simply means as good as the chart looks, it has underperformed the S&P 500 since the end of March. Let's go now to the NASDAQ 100, and this is breaking the 21-day moving average. Look at the up and down action of the relative strength line on this, and this pretty much summarizes what's been going on with the market since the end of May. A lot of chop, a lot of 3 steps up, 2 steps back, 1 step up, 3 steps back, and is right in line with what we're seeing on the Revere AI 100. It's been the predominant theme of this bull run, and what we may just see, I'm going to take a look at a couple of sectors. In fact, I'm going to go through the 3 main sectors that have ETFs that you can look at to get a good handle on what's going on with the AI trade. We're going to start off with DRAM. This includes the memory names. The big 3 components in this are Micron and the 2 South Korean memory makers. And Micron reported blowout earnings last week, and the stock is now below the low of that gap up day. In fact, it's down from the high on that day of 1255 back below 1,000. So approaching a 20% pullback in less than a week. That's not good, obviously. Yes, it's a leading name. All leading names need to base and reset at some point, and perhaps we'll see something like we saw back here. Let me take the date back to 3/31 of this year. And what you will see is after after a nice run up, very strong run up in Micron from 128 to 455, it formed a base, tried to break out, and that breakout failed. All it did is pull back to the 20-week / 100-day moving average, and then it reaccelerated its move back to the upside. So let's go back to today. Very strong run from the 480, 500-ish breakout all the way up to 1200. You can see how things have gotten wide and loose over the last month. Now it's breaking the 21-day moving average. It may just, and leading stocks do this all the time, pull back to the 50-day moving average, form a new base, and go higher. But what we're seeing right now in the AI trade is our stops are triggering left and right. Stops got triggered earlier in the run for a bunch of these names, and we didn't catch the last leg up. Maybe we'll get another opportunity if they form decent bases. But that's looking into the future, and that's predicting. And yes, absolutely, the fundamentals are still fantastic, but that's one of O'Neill's rules. The fundamentals always look great at the top. The last of the 3 ETFs is SOX, semiconductors. Also breaking the 21-day moving average after a big run, again, a huge run from 368 up to last week's high, 653, now down to 574. So not as big a pullback here as you're seeing in the memory names. But the crazy thing is that this memory name breakdown is happening after fantastic earnings were reported on Micron, and Connor's going to walk through all of these names in more detail when he does his presentation. So if we were concerned last week, we're more concerned this week. What are we watching? Well, obviously the NASDAQ 100 breaking the 21-day moving average, and the choppiness on the relative strength is not a positive. The equal weight S&P 500 looks just fine. We keep an eye on that. And mid caps and small caps. Here's the Russell 2000. These have been showing relative strength, and they're fine. They're all the way up at their 8-day moving averages, not even testing the 21 at this point. But if the market's going to break down wholeheartedly on the big tech, this is going to trickle over to the mid caps and the small caps. Dow Jones Industrial Average is a price weighted value type index. This is at all-time highs. Nobody even has any concern if you just listen to what the quote for the Dow is on the way home from work. But under the surface is what we're concerned about. The themes that have been driving this bull market are very clearly weakening. And you can tell it just by looking at this picture of the Revere AI 100. So with money coming out of here, where is the money flowing into? Let's quickly go through all of the S&P, the 11 S&P sectors. Basic materials just going sideways, not so bad there. Energy has come off hard since the memorandum of understanding with Iran was reached. In fact, oil has completely round tripped where it started. It's not showing here on the USO chart, but if you look at the futures crude, it's completely round tripped it. You know, that's ironic that gas prices haven't come down anywhere near as much as the price of oil has, but the administration is making some noise about that, and we'll see how that plays out. So oil, let's look at financials. Market really doesn't break down hard if financials are acting well, and this is a really nice cup and handle breakout on XLF financials. So money very clearly rotating into financials. How about industrials, XLI? Not bad at all either there, showing relative strength. Recent breakout of a base on base, absolutely nothing wrong with that. XLK technology, that looks fine. That's just basing, but because of the massive weights in these, that's carrying over and is being a weight on the S&P 500 and certainly the NASDAQ 100. XLC, this is communication services, primarily Google and Meta. And you can see this basing, and it's weak on a relative strength basis. This topped back in April and has been showing no relative strength at all, and money very clearly coming out of this sector. XLP, staples. When tech is acting well, staples don't act well. When tech is faltering, it tends to outperform. You can see very choppy relative strength line here. What you generally see is that this pops for short periods of time as money flows into it, but then traders, hedge funds take their profits while they're hiding money out in this and rotate it into other sectors. XLRE, real estate, nothing wrong with that. Very choppy again, but it's chopping sideways, and the relative strength line is very choppy as well. We typically don't put our money into real estate names as we're a growth shop firm. XLU, utilities, generally known as a safety trade, but these utilities have acted more like growth stocks along this run up, now just forming a base. XLV, money big time flowing into here and into biotech. You can see how weak this was when we had the last leg up in tech in April. After April, and a breakout and a follow through to the upside, and then finally XLY, consumer discretionary, not showing relative strength, basing, but very clearly lagging. So what you're seeing is money coming out of these big sectors, flowing into these big tech sectors, flowing into individual, more value-oriented components of the S&P 500, and that is why we hold a core position in the S&P 500 to catch all of this rotation. So this is showing rotation where we have declining tops, meaning lower highs. We also have rising lows, higher lows. This is a big triangle, and which way it resolves will likely dictate our confidence or lack thereof in the market. And that's very much what we're going to be looking for. And if money is flowing out of the market wholeheartedly, you will also see the RSP start to underperform. Not underperform, you'll see the chart start to falter, very similar to the way things did. Let's go back to the middle of 2022 when we were in a bear market. Here's the RSP. You'll see it start to break all of the moving averages. There's the RSP, but notice the relative strength line was trending higher because the average stock was losing less than the big market cap weighted stocks. So there's RSP, and here is S&P 500 back when we were in 2022, the bear market, and here's the NASDAQ 100. The bottom line is when you're in a bear market, money is coming out completely of every segment in the market. There are more sellers than there are buyers, but at this point, we're just seeing rotation. And this means that we're playing the indexes heavier because the market is stopping us out of our growth names that we've been putting capital into. There are some things that are new on the list. We'll talk about them as we progress through Todd's presentation. But for now, if we were mildly concerned last week, we're a little bit more concerned this week about what is going on with the AI trade, which has led the market up. Right now, market coming out of there, money flows coming out of there and going into value sectors. If that continues, we can go sideways for a while. We will drastically reduce our trading and our position sizes because we do not want to get chopped. We'll focus on smaller positions in the sectors that are working. Let the index portion of the portfolio drive the train until we are in a better position from a market standpoint to be investing back in growth names. So that's where we are on the market right now and the sectors making up the market. Certainly concerned about what's going on with the AI trade, and that RAI 100, we started it 5 weeks ago. We'll update the value of that. Every nightly video that we do, we show every trade that we do in our portfolios, and we take it step by step, day by day, no predictions. July is typically a positive month for the markets. Yesterday, we kicked off July down 0.2% on the S&P, but down 1.5% on the NASDAQ 100. Fast forward to today, we're down another 0.2% on the S&P, but another 1.5% on the NASDAQ 100. And that really tells you everything you need to know about what's going on in tech land. Let's take it now to the individual presentations of the guys. And Connor is going to pick up with the memory names. I gave a little intro on that, but this is certainly an area to be concerned about. Take it away, Connor.
Yep. Thanks, Don. And I will add on you're just talking about seasonality. So I actually read this morning that although seasonality is typically, historically bullish for the market this period, if you just it's typically bearish for like the momentum factor. So real quick before I get in my segment, if you just pull up like the MTUM, seasonality for this area of the market is typically very poor in this period of time, and we're already seeing that with MTUM is essentially a lot of AI, a lot of growth stocks. So that's interesting. I just wanted to add on to that. But to my segment.
Great point, Connor. So basically what we're seeing historically is exactly what we're seeing now, money coming out of tech and momentum and going into more value type sectors. XMMO is another momentum ETF. This is more mid-cap related, and same thing there. You can see the relative strength declining. So really good point there.
Yep. Yeah, and I posted the chart on my Twitter if any of the watchers are interested. So yeah, into the segment. So last week, I did a segment, and kind of the main topic was narrative and sentiment follow price, not the other way around. And that, remember, the narrative and the fundamentals always look best at the top. And we're taking a look at Micron right now. And the worst thing in a bull market is not for a stock to sell off on bad news. That dip typically gets bought. The worst thing is when they stall out and crack on good news. So basically, the market is telling you that all the good news is priced in and it can't go higher. And that's a lot more dangerous than a stock selling off on bad news, because we see that all the time and it typically gets bought up in a bull market. And Micron's a pretty good example of that. And you can see, right, this has been, one the best stock in the market. Memory has been the biggest theme, the biggest story, the biggest narrative. And this reported earnings last week, great earnings, like everyone expected, and the stock was unable to go higher. And so it pulled back, and then it tried to rally back up, and then it put in a lower high. It was unable to take out those all-time highs. And yesterday, another bearish thing was it was the first close below the 21 EMA for the first time since this run started in April on the follow through day. And, typically, that's a character change in the stock. If it's respected the 21 EMA for the last couple months, yesterday was the first close below, so that's a red flag. And then today, it's breaking below that 100 or that 1,000 Livermore level, which these big psychological levels can often be turning points as well. So what we're seeing with Micron is a stock that got extremely, extremely extended. It was huge percentage above the 200-day moving average. You had a great earnings report and the stock was unable to go higher, and now you're seeing it roll over below the 21 EMA. So really bit of a red flag for memory. And in a choppy market, not saying this is topped whatsoever. Tops are a process, but this price action is telling us that this likely needs a new base at minimum, or this needs a deeper pullback. So that's Micron. And then if we take a whole view of the group, the other stocks in the group agree. So the next name is SanDisk, and this has been the other best name in the stock market as well. And you can see here, character change as well. Yesterday was the first close below, or today's looking to be the first close below the 21 EMA since the fall through day started. And this one has been getting very wide and loose and erratic. And typically that's what you see near the end of a run, or when a stock is going into a, bigger basing period, because SanDisk has been an exceptional stock. It's gone from $70 all the way to over 2,000. And a lot of those runs were relatively smooth, low volatility. And what we're seeing in these stocks now is extreme volatility. News catalysts are causing a lot of big swings, and the price action is just wide and loose, which is not what we want as a trend following swing trader or position trading shop. So another red flag on this one, breaking the 21 EMA, risk off. And if we take a look at Western Digital, this is another one of the sister memory stocks, and these topped before Micron, SanDisk, right? So a lot of people thought that the blow off run climax action would be in Micron or SanDisk, but you almost saw it in Western Digital, right? The stock went from 500 to 800 in a very short period of time. You can see it stacked multiple gap ups in a row. And ever since that high at 800, it's continued to put in consecutive lower highs, and now it's breaking key moving averages, and the price action is just wide and loose. Like the last couple weeks in these stocks, there is no edge because it's so erratic and up, down, and there's no trend. And then take a look at STX, another one. This one kind of was trading in line with Western Digital as well. This one went from 800 to nearly 1,200 in short order. And now since that high, it's continued to make a series of lower highs. You can see that relative strength line, and you can see wide and loose price action. So again, another risk off. And then the other big aspect of the memory trade is Korea. So if we take a look at EWY, the Korean markets is basically all concentrated in memory, and this has been a good tell. And you can see this has been showing same characteristics of price action, choppy, failed breakout, and now breaking below the 50-day moving average. And I'm not going to show the charts, but you can read that all the sentiment in Korea on memory was through the roofs. Retail inflows were at record highs. Margin for the Koreans were at highs. Sentiment was just as bullish as it possibly can get. And that's typically when you want to get out of a certain stock or group. And Korea continues to show weakness. You can't show the charts of SK Hynix and Samsung, but those also are breaking the 21 and I believe the 50-day moving average. So that's another red flag, first time really since their runs. And if we take a look at DRAM, which is an ETF, that is comprised of all the memory names like SanDisk, Micron, Western Digital, but this also holds the Korean names like SK Hynix. And you can see here, very wide and loose, and this one's getting huge volatility, breaking down today after huge runs. So at minimum, it's looking like this whole group needs weeks of basing or a harsher pullback, but definitely risk off for these stocks. And really, the main thing is, one, the price action is telling you that, and number two is everyone knows the story, and that's why we're seeing all this volatility and all this wide range. And it's turned into a very consensus long, and that's typically when price action gets wide and loose and when you don't want to be in it. So definitely some red flags in memory, and this does not bode well for the AI trade in general. But what we've seen is the market's been very choppy, so I would not be surprised at all for these stocks to be up 10% on Monday. That's just been the nature of the market. But there's enough signs for us to just stay on the sidelines, watch, be patient to see if these, set up an optimal entry for us to get back in. But for now, we're just watching, tons of volatility, and for now, looking pretty bearish.
For now, looking pretty bearish. I would say that is a pretty bearish chart that you're showing there, and that pretty much sums up what's going on with the AI trade. Good stuff, Connor. Thank you very much. Let's take it over to Todd. Not all things are in the trash can. Todd's going to talk about a couple of names that are we hadn't talked about a lot, but we've been keeping our eye on, and they're acting well. And we're going to start off with Reddit. Held this in the portfolios quite a while ago when it was healthy. Now starting to form the right side of a base after breaking down, or the failed breakout of a base late last year. Take it away, Todd.
Right. Yeah. So when we start getting rotation and breakdowns, we'll look at a handful of stocks that are reclaiming the 200-day moving average that may result in new leadership potentially. A lot of these names take a while to develop as they're below that 200-day moving average, and not all these are created equally. Reddit is a name that really had quite a long basing period after that drop, as Don mentioned, and we really look for several shakeouts, several false starts, and then ultimately a pretty good setup and reclaim. And you can see this Reddit just has been building this nice little bottoming type base and was up 15% yesterday. I don't really know if there was any news on it either. It just popped through that 200-day moving average and traded nice volume. But this is a name that we took a small starter position today in Grotection, and we're naturally going to expect these to potentially pull back to that 200-day moving average, which it did today. But we'll want that area to hold here on this particular name. Maybe retrace to the 8-day moving average at worst, but this is certainly a situation that looks promising, and the potential start of maybe a new uptrend in this stock, a new stage 2 uptrend. The second one is HOOD. We talked about this last week. Turbo took a position in this yesterday, and this is a little bit different because you can see that left side is pretty choppy, and in a situation like this, you're going to want to see the first move of through the 200-day moving average. You're going to expect a failure, which it did, and it pulled back right to the 21-day moving average and held, and then reclaimed it. So this is a little bit different than Robinhood in that Robinhood had a little bit better setup. It was close to that 200-day moving average, where this one needed that retest and that shakeout again, which it did. Held the 21-day moving average, came into the old highs from the left side and held, and had a nice re-breakout above that 200-day yesterday. And incidentally, this 200-day is also flattening out. We'd like to see that 200-day, flattening out versus heading down as well. And the next name, and again, the Dutch Bros is our next name. This is a name that had been on the weekend review. HOOD was added last weekend. So I'll start putting some of these names on the weekend review as we see them happening. But Dutch Bros is a name also that had several attempts to get above that 200-day moving average going all the way back to last year. Many false starts as that 200-day was in a steady downtrend. But recently, it was able to reclaim that level back in May after it had a shakeout down to the 50-day moving average and set up another test and reclaim of the 200-day moving average, and that one's been able to really take hold. You can see too, if you go way back to last year, you can see that mid-level. Let's see, what is that level there? Around 65.93. That was another key level that it was able to get through. And you can see that better on the daily chart, Don. Yeah, 65.92 right around mid-December there. That was that area that it kind of reclaimed after it pulled back after the initial launch through the 200-day moving average. And finally, another one that is showing some interesting action is Rubric. In the security area, we see several of these names, doing quite well. We're in the FTNT, but also PanW is doing pretty well. And this one came through that 200-day initially really hot, which is, something we would just observe. We wouldn't necessarily take that first move through the 200-day moving average. But this is another flavor where you get that pullback and hold of the 200-day moving average, which this exactly did. And, spent multiple days holding along that 200-day moving average. And that's another way you like to see these marinate after, an aggressive break if they didn't have, much of a left side development. But this shakedown to that 200 was a nice retest, and now you're seeing very nice relative strength in this name. So many flavors of how to play the 200-day moving average. Definitely more prone to failure than a clean breakout to new all-time highs, as you do have, resistance, overhead resistance on the left side. But, these are ways to detect potential new rotation, new stage 2 uptrends of past names that, went into long bottoming type bases. And that's it.
All right, Todd, good stuff. Always new names coming to the fore, and always important to pay attention to them when they do, because we do want to focus on that market rotation as opposed to money leaving the market. We're going to turn the controls over to Ted now. Ted's got an interesting presentation. We've been talking about how bad Bitcoin has been looking, but is it time for a resurgence? Take it away, Ted.
Thank you, Don. Yeah, exactly. We've been talking about how bad Bitcoin has been. There's floating rumors that Michael Saylor might get liquidated and MSTR might go bankrupt. You have his derivative, such as STRF, completely capitulating the last week. Same with STRC. You can see that sort of capitulation, and now this week you had a bounce back. If you look at MSTR, it's been trending down for since the high 84 weeks now, so over a year and a half. And we've talked about it before that oftentimes a leader's uptrend lasts about 18 months. And on the opposite side, a downtrend lasts 1 to 2 years as well. That's just what completes a stage analysis cycle that typically lasts anywhere from 2 to 4 years, depending just on specific asset or stock. So we're not here to try to predict or pick a bottom, but I did want to do this analysis that I noticed recently with Bitcoin, compare it to the previous cycle. And there's very similar characteristics. I guess we can start off with the topping area. You can see both Bitcoin in the last cycle and this cycle topped at a double top. So double top pretty much is you make a current high, pull back, and then you breach that previous high and then fail right there. So you can see in November 2021 that happened, and same thing in September of 2025. And then afterwards, you see Bitcoin. This is a weekly chart, by the way, goes for 3 legs down. You have the first leg down here, and the analogous example for this cycle is right here. First leg down, you have this uptrending bear flag base, if you were to call it that, just like both cycles, and then you go for the second wave down. And both the second wave down, you typically, what we saw was a capitulation week at the lows, and I labeled that in both examples here. You can see the capitulation week had large volume, just like these both examples in both cycles. You wicked off and closed, in that 30 to 40% weekly closing range, and then you started chopping around for many weeks. This one rose a little bit higher than the last cycle. Last cycle, we got to about the 20-week moving average, which is the green line. In this cycle, we got to the 30-week, declining 30-week moving average, which is the magenta line. However, oftentimes, Bitcoin loves to do that one last shakeout, and that is what we've seen this time around. We broke down, made new lower lows in both cycles, but that didn't continue for new lows. And in both cycles so far, you reclaim that capitulation low, and that is when Bitcoin starts to round out a potential bottom and potentially break out into a new uptrend. We don't know if this is the bottom, but the characteristics are quite similar. It's lining up in the 4-year cycle, if you still believe that exists. So that's just one thing to pay attention to. With the sentiment, it's very, very low right now. No one wants to talk about Bitcoin. Everyone says crypto's in a winter, in which it is. There's really no crypto besides one that's above the 200-day and 50-day moving averages. So this is just some characteristics I noticed about this cycle versus last cycle. And what we want to see now, if you are to get interested in Bitcoin, is these lows hold of the last 2 to 3 weeks. You start to back and fill a little bit for the next 2, 3, 4 months. The 30-week, declining 30-week and 40-week catch up to price, just like in the last cycle. And then once the moving averages are flattening, you reclaim those moving averages, then you can potentially get interested in Bitcoin again. Again, there's no rush. If you just study the longer term Bitcoin chart, all the linear high alpha, just linear high alpha big moves come above a rising 30 and 40-week moving average. And then below a declining 30 and 40-week moving average is hands off. So that is what I would potentially look for to get reinterested in Bitcoin. We haven't talked about it for nearly a year because there's nothing to talk about except that it was in a downtrend. But let's see what happens going forward into the midterms. A lot of times Bitcoin does like to find lows in the October, November area. So we'll see what happens, just like last cycle. One crypto I did want to talk about is Hyperliquid. This recently, not recently, like ICO like a year and a half ago on Coinbase. And what's different about this crypto project is that they actually generate fees. This is a decentralized crypto trading platform. It's like a Coinbase, like a Kraken, like a Gemini by the Winklevoss twins, but it's decentralized. And just like all the platforms, if you make a trade, you pay fees. There's also an instrument called perpetual futures in the crypto world, which is just futures without an expiration date, which is why it's called perpetual. And those margin requirements can be expensive, shorting can be expensive, and just trading in and out of them in general can be quite costly. So that is how this platform makes those fees. And it's a unique crypto project that actually makes money, and the price action is backing that as well. Just like in equities, we talk about it after a bear market. What do you want to look for? Or after a correction, what do you want to look for? You want to look for stocks that are holding up well, building higher lows, near all-time highs, trending above all key moving averages. So you can clearly see there's a contrast between this chart right here, which is Bitcoin's weekly. I'll pause for a second. And then you can see this is Hyperliquid's weekly. This is on the top right of the chart, heading upward to the right. Bitcoin is still right now at the bottom right of the chart, heading lower. And there's just a simple saying that you want to buy stocks or instruments heading up and to the right. You can see Ethereum also is in a downtrend. Solana is in a downtrend, but also undercut and reclaim that capitulation week as well. And now back to Hyperliquid. This is just made a new all-time high just even a few weeks ago and has been building this flag, riding the 10-week moving average for the last few months. You see the 10 is above the 20, it's above the 30, and above the 40. So you have the full bullish alignment as well. Looking at the weekly RS line, this is compared to the S&P 500. And you can see that has been outperforming the S&P 500 since March. But another exercise you can do is put in the Bitcoin USD comparison. If you do that, you can see the purple or magenta circles represent RS line new high before price. And this has been flashing for the last 3-4 months versus Bitcoin. And actually it's flashing this week as well. RS line new high before price with Bitcoin. So that's some relative strength characteristics and moving out and just trend characteristics. Other ones as well, you can see this is volatility contraction here on the weekly. And we have an inside week as well. Zooming on the daily, we've talked about the Minervini VCP and many other names like SanDisk, MSTR back in the day, NVIDIA. Some of the big winners, MU as well in the last few months. Some of the biggest winners have this characteristic right here. You have a big move up, super linear. You can see it's very pleasant to the eye. Linear pullback as well to the 50-day moving average area. Comes back up, briefly makes a new high, gets rejected, but still orderly pullback, then back to the 50-day. And now you have the 821 and 50 converging with very tight action here. And you can see the volume characteristics are perfect. It's normal to have some higher volume selling on that first pullback. Then you can see volume has completely dried up here. Then on the up move, you have volume come back in. This pullback, volume dries up. And now you have this support hammer candle right on the 50-day with huge volume. And volume's completely dried up here. So say the breakout level is about 68-ish. So that's just what I'm looking at here. I really do love the flags, weekly, daily flags on top of previous all-time highs with full bullish alignment. So that's just something we're looking at. There's definitely less correlation to stocks, and it's always nice having something that's a little bit less correlated in the portfolio.
Great stuff, Ted. So Hyperliquid, that's when you see the 24-hour, 7-day-a-week quotes for stocks trading over the weekend, that's most often where people are pulling them from, if I'm not mistaken. Is that correct?
Right. So actually, I'll just add on to my segment since we were talking about it earlier. So don't mistake Hyperliquid crypto with PURR, which is called Hyperliquid Strategies. It's not the exact same thing, but Hyperliquid Strategies does own a bunch of PURR. It's like a Hyperliquid treasury. If you want direct one-to-one exposure, then BHype is the Bitwise ETF. You can see it's more gappy because it doesn't trade 24/7, but you can also see the volatility contraction characteristics on this chart. From left to right, you have the first pullback, which is 28% deep, second pullback, about 21% deep, and this third one, about only 7% deep. And the volume has dried up as well. There's also THype, which is the 21 shares one, but this one is less liquid. I think, pretty sure BITX is by Bitwise as well, if I'm not mistaken. But anyways, BHype is the ETF to trade if you want an equity instrument for Hyperliquid. And so I guess just to finish off, besides the technicals and how they also generate fees, there are some potential regulatory changes that would open up the decentralized 24/7 trading to potential institutions to get that 24/7 overnight liquidity, which could be an extra catalyst as well. We've seen BlackRock CEO Larry Fink talk about tokenization of assets. And what he means by that literally is bringing like real estate, bringing art, even stocks on chain, and Hyperliquid would be potentially one area to trade those tokenized assets. So that's kind of the narrative and theme for this crypto and why it's acting so well relative to other ones. There's actually just also one more thing. Lighter is a smaller, higher beta version of Hyperliquid. And you can see it just made a new all-time high out of this ICO base. So another decentralized crypto trading platform. And just like in equities, when we look at themes, it's similar in crypto as well. There's different types of themes in various crypto assets. So that's it from me. Just potential interesting opportunity. Again, it's just an idea, can always fail, but above 68 would trigger to the upside, and below the 50-day moving average and this upper trend line you can see about 60 to 61ish would trigger to the downside, and likely it would need more time to build, or it could just fail outright.
All right, good stuff, Ted. Thanks for expanding our knowledge on that. And let me bring up the S&P 500 there. As of 12:30, we're near the lows of the day. I talked about bubbles bursting before. Internet bubble bursting. S&P 500 from the high in March 2000 to the low in October 2002 lost 50.5%. The real estate bubble bursting causing the financial crisis from the high in October 2007 to the low in March 2009. The S&P 500 lost 57.7%. During COVID, February and March 2020, the S&P 500 lost 35.4% in 5 weeks. The bear market, January to October of 2022, the inflation bear market, S&P 500 lost 27.5%. Fast forward to this week. We finished the year, the first half of the year up. Our two main portfolios, Grotection and Turbotection, are trailing the S&P 500 by a few hundred basis points. When you're an active manager, there are going to be times when you're going to underperform. But when you're in a bear market, your money is in the safety of cash or fully hedged or participating by making gains while the market goes down, because we're in inverse ETFs or inverse single stock ETFs. We're not always going to beat the market, but we have a plan in place to never get hit in the back of the head with a 2x4 or even a 4x4 in the case of big losses. I'm not saying that AI bubble is bursting, but if it is, we know how this is going to trickle over to the markets. Revere clients are protected. Is your advisor have your downside protected during the next bear market? It's a combination of us participating in the uptrends and protecting asset in the downtrends that allows us to beat a diversified portfolio over the long term, with losses less than half over the last 3-4 bear markets of what the S&P 500 pulled back. That's what you get at Revere. You also get it updated every night in a video. You get a weekly podcast. Todd does a deep dive on the weekends, telling you everything that just happened in the past week and what you need to look at in the upcoming week. Our YouTube subscribers are at all-time highs, as are our Twitter followers. We put ourselves out there every day telling you what's going on in the market so that you protect yourself and we protect our clients when things turn bad. Everybody's a genius in a bull market. Who's going to protect you in a bear market? It's like William O'Neill said, anybody can get you in. Who's going to get you out? And with that, I am going to send it back to the spirit of Dan to wrap up the week. Thanks, Don. You like what you heard? Tell your friends, tell your neighbors, go to revereasset.com. Check out our FAQ. It talks about everything that we do. If you're interested in becoming a client, just click Contact Us on the website. And we'll see you next week on Your Money. Your money. Not about making the market, about how much you